What's going on, everybody? I hope you're doing okay. Today, I want to talk about a stock called PayPal, ticker symbol PYPL. PayPal has most definitely seen better days, currently trading sub $52. And one thing seems to be certain every single week, PayPal makes a new 52-week low. You see, but PayPal didn't even make a new 52-week low. PayPal is down for over 5 years. As a matter of fact, PayPal is down around 40% over the last 5 years. And the last time you had a price of $51 per share for PayPal was now in the beginning of 2017, sometime around April. This is absolutely insane. And I want to make a really cool comparison that Alejandro put out earlier on Twitter. You be the judge if PayPal is a great opportunity or PayPal is dead money. Fair warning, I do have a position in PayPal, mostly in options. I do believe in this company as a trade, and I won't be holding this company past 2025. Once my options hit and PayPal either does or does not hit around that 110, 120 mark, I am out. I am absolutely freaking ghost. You won't see me investing in PayPal for quite a while. I'm literally using PayPal as a stepping stone to make some gains to reinvest in companies like Palantir and Truist and SoFi and other more conviction plays. But with that said, I do truly 100% believe that PayPal is a great opportunity for this stock in terms of price, capabilities, and the amount of freaking money PayPal is absolutely just printing. Let me show you the screen really fast. Let me know in the comments down below what you guys think. And again, this is just entertainment and education. At the end of the day, you need to stand on your own 2 feet and you need to make your own decisions. I'm a big boy. I am underwater when it comes to PayPal, and I understand the risks when it comes to investing. And you should definitely do your own due diligence and do your own research when it comes to investing. Don't blame anybody if you lose money, and don't congratulate anybody if you make money. At the end of the day, you make your own decisions as a big boy or girl. Take a look at the screen and take a look at this amazing tweet from Alejandro. Alejandro put out a tweet. By the way, if you don't know who Alejandro is, make sure to follow him at ALETECHVIEW. He has the most fantastic website, which I'm going to show you in just a moment, which makes it super simple to look at charts when it comes to stocks. And he said, $430 billion of market cap difference between Visa and PayPal. This is not normal behavior. And then he posted the actual revenues between Visa and PayPal, which is quite interesting. And if you want to take a look at the numbers a little closer, the current market cap for PayPal is $56 billion, while the current market cap for Visa is $447 billion. It is absolutely a huge difference. So then he's showing you the actual revenue, and this is revenue per quarter. It's going to be very interesting to see what PayPal is going to do, and then he's going to make a further comparison. However, there's not much difference between PayPal and Visa. And as you can see, Visa was outpacing PayPal for quite a while, and then PayPal just kept catching up. There was essentially no difference around these years of 2020. And yes, Visa did widen the gap. However, it is not that much of a difference. Their revenue is consistently going up. Now, all revenue is not created equal, and you got to look at gross margins and net margins, so on and so forth, which I will show you in just a moment. I'm going to make a bunch of comparisons, and you come up with your own thesis if you think that PayPal is a good investment or not. I'm just trying to make some comparisons based on Alejandro's amazing tweet, and it really put things in perspective. I wouldn't have done this without his tweet. So somebody says, what's the profit margin delta though? So the profit margin is your net margin, how much you're making for every single dollar of revenue, right? So if your margin is 50%, for every single dollar, you're making 50 cents. But if your margins is 10%, for every dollar, you're making 10%. So if your margins are higher and you're making less revenue, you could still be making more money to the bottom line, or you deserve a bigger multiple because your expenses is that much less when it comes to, making money on your bottom line. Both companies are free cash flow monsters. So he says it's about 3x depending on the quarter. And that's my point. Market cap of Visa is 10 times the market cap of PayPal. So he's trying to say is it's not that Visa is not worth more than PayPal on the metrics. He's saying that Visa should not be worth 10 times more than PayPal on the metrics. You know, I don't know if he's saying it should be worth 3 times or 5 times or 7 times, but he's trying to say it should not be worth 10 times. So these are the numbers right here. In the blue is the Visa's net margin, which I'll go over in just a moment. And in the green is the net margins of PayPal. Obviously, Visa is doing a lot better. Let's do a little bit of a closer comparison. But I just want to show you a couple of tweets. People like, hey, I love the chart. Why would anybody own Visa? Blah, blah, blah. And it's basically a duopoly or a triopoly between Visa, MasterCard, and maybe Amex. And then a couple of people are saying something we're missing about PayPal, right? So this guy, Ghostface, says there's something we're missing about PayPal. Doesn't make sense. Institutions absolutely unloaded. Someone always knows. Branding-wise, Visa is considerably more respected than PayPal. True, but is it 10 times more respected? And that has something to do with the multiple that they're getting, which I'll go over in just a moment. So these are the numbers overall for PayPal, and these are the numbers. I can't do a split screen, so I'm just going to go over one by one. So PayPal is 56 billion, Visa's market cap is 447 billion. For your revenue, you had 7% for PayPal growth year over year, and it's 11% for Visa. 3-year growth is 13% for PayPal, while 3-year growth is 16% for Visa. 3-year profits growth is negative 23% because the profits are shrinking for PayPal, while Visa, the profits are 20% because profits keep expanding. Gross margins for Visa is at 58.7%, while gross margins for PayPal is at 48%, but we're going to look at net margins in just a moment. Cash to debt for PayPal is 0.94%, and cash to debt for Visa is 0.98%, so they're pretty even there. Now, this is going to be profit margins for Visa, and this is going to be profit margins for PayPal. So the profit margins of Visa are pretty steady. The profit margin from 2018 is 48%, and right now the profit margins are right at 52%, and they're pretty much steady going on an uptrend. The profit margins for PayPal are not as good. See, the profit margins of PayPal were always around that 12%. Up until 2019, it dropped. It freaking went massive to 22%, dropped after COVID. And right now it's starting to go back up, right? The profit margins are at 8%, 8.5%, 8.7%, 9.6%, and then we had 14%. The thing is, the net margins are not due to transactional margins, it's due to operational margins, which means they're cutting costs for operating the actual business, but they're losing money on transactions, and that's because of Braintree. They kind of shot themselves in their foot with Braintree because Braintree is essentially unbranded PayPal, where a company essentially gets everything that PayPal offers you, but they're paying a lot less in fees. But when you're actually using PayPal, branded PayPal, you're getting the same thing as unbranded PayPal, but you're paying a lot more fees. Now, management said that this coming quarter, quarter 3, the transactional margins are still going to go down, but this is going to be the inflection point. And in quarter 4 of this year, the profit margins are going to go up, the transactional margins, which should in turn things around for quarter 1, 2, 3, and 4 of 2024, which is what I'm banking on. This is my play when it comes to PayPal. I am hoping that is exactly what happens and PayPal can take off. Let's take a look at a few more charts. So this is going to be for the revenue. The revenue for 12 months ending June 30th for PayPal is going to be $28 billion. They're going to end this year with like $30 billion. And for the quarter, it's $7.28 billion. Now, if you compare this to Visa, Visa is at $8.1 billion. And for 12 months trailing, $31.8 billion. It's not that far off, right? $7.2 billion versus $8.1 billion, $28 billion versus $31 billion. And this is where it gets really interesting. This is PayPal's PE ratio. Currently, PayPal's PE is at 15. This is the lowest in history that PayPal has ever had a PE. A PE is the price to earnings ratio. This is the multiple that Wall Street is willing to give you. You see, this PE should be double. It should be somewhere around 30 in general. And that would still be low. Like if you look at the historical for PayPal, PayPal is well above that 30 mark. So 15 is super, super low, which means Wall Street thinks that PayPal is literally dying. I don't think it's dying. I think it's slowed down, but not slowed down to the effect of a 15 PE, right? It's super, super low, a 15 PE. If you compare that to Visa, the PE for Visa right now is 33. So I believe that the PE for PayPal should be somewhere in the low 30s, high 20s, not 15. For God's sakes, if you look at Coca-Cola, the PE for Coca-Cola is going to be standard at those high 20s, currently at 23. This is literally for Coca-Cola. If you go to MasterCard, which is another payment processor, the PE for MasterCard is at 36. The PE for McDonald's, guys, the PE for McDonald's is literally at 23 as well. Now, right now, PayPal is suffering. Pretty much all of fintech is suffering. But I still don't believe PayPal is fairly valued at $52 a share or even $60 a share or even $65, $70 a share. I think PayPal is going to turn this around to a degree. I never think PayPal is going to be $300 a share again. That's my personal opinion. I could be completely wrong one way or the other, right? I'm not a genius here. I'm just giving you guys my own personal plays. What you guys do is up to you. Please don't follow me. Do your own due diligence. But it seems to me a company that has $5 billion of free cash flow that already bought back $3 billion of shares and has another $2 billion, like $1.9 billion to spend is absolutely massive. At a 50-something billion dollar market cap, they have $5 billion to spend next quarter as well. I'm sorry, next year. Think about it. They're going to buy back nearly 10% of the company. Now, it's going to be very interesting to see what's going to happen in this next quarter and the earnings call if they did or did not deploy that extra $1.9 billion. If they deployed $1.9 billion to buy back shares and the share price is still at $51, $52, this is terrible. If they did not deploy the $1.9 billion, thinking that the price is going to go lower and they still got that ammunition, then the price going lower is a good thing because they're going to be able to buy back more shares. And they didn't make their defensive position, so to speak. In the comments down below, do me a favor. Do you think PayPal deserves to be $52? Are you interested in PayPal losing interest, or now it's getting interesting because of the, where PayPal is right now? And do you think that PayPal is going to be able to turn this around in 2024? Like I said, I'm praying that in 2024, my thesis plays out. I do have a thesis. And if it does, fantastic. And if it doesn't, it is what it is. I lost out. Bad play. In hindsight, yeah, it sucks when you get in at a higher price and you never thought that you would be in this specific place. I never thought that PayPal was going to hit $52 and it can actually go into 40s. But it is what it is at the end of the day. You make your play, you have your thesis. If you invest without a thesis, if you invest without a plan, that's a shame on you. But if you invest in a plan and it just doesn't work out and doesn't go according to the plan, it is what it is. Now there's a lot of geopolitical uncertainty and a lot of fucked up shit that's happening in the world right now that can affect the price of PayPal, super uncertainty. But I still think that PayPal is a great deal. And the lower the price goes, it's just like nothing really happened to PayPal above and beyond what we already know happened to PayPal. And what we already know is happening to PayPal. At the end of the day, this thing is just dropping in the broader market right now, right? With what's currently happening in the broader market. So it's going to be interesting to see what's going to happen towards the end of this week and next week and right into earnings, which I believe is November 7th, if I'm not mistaken, the first week of November. Guys, thank you so much. Know down below what you guys are doing with PayPal, what you think about PayPal. Is PayPal on your radar or did it fall off the radar and you want nothing to do with it? Are you going to take your losses and move on, or are you double downing and buying the dip? Thank you and have a great day.